Hello and welcome to this LP3 loan management software training video for the account status section of the account record. The account status section gives a quick reference of the following statuses and options. What is shown in this section is based on company settings in the config area of the software, and minimum payments and time since loan was made will have an effect on the renewal refinancing to a new loan amount, and if the customer must pay to renew or refinance, or can receive money to renew or refinance. In this first example, renew AMT FIN, renew amount financed, is either a green amount with an R for receive, amount customer would receive, or in this case, a red amount with a P, amount customer would pay to renew or refinance the loan, once eligible to renew or refinance per config settings, if they renewed with a previous amount financed. If the customer is not eligible for renewal refinance, this field will be blank. Renew high credit is either a green amount with an R for receive, amount customer would receive, or a red amount with a P, amount customer would pay, to renew or refinance the loan, once eligible to renew refinance per config settings, if they renewed based on high credit amount being higher than the previous renewal amount financed. If the customer is not eligible for renewal refinance, the field will be blank. High credit is set at $1,000, the maximum amount the customer is allowed to borrow, and the terms is set to 13 months, the maximum length of time allowed to pay off the loan in full. And the current payoff IF of the loan is currently $1,115.96. This amount is greater than the high credit amount because when the customer last renewed or refinanced the loan, additional charges like acquisition charge were added to the original amount of $1,000, and the customer has not yet made enough payments to bring the payoff IF amount to less than the high credit limit amount. So, in order to renew or refinance the loan for the current highest amount allowed under the current settings of $1,000, the customer would have to pay $115.96. One example of when a customer would have to pay to renew or finance would be if they've fallen behind on their payments for one reason or another, and the manager under company policy allows this to happen. The date is currently January 3rd, 2025, and the date the offer of paying to renew $115.96 will expire on January 11, 2025. The date is currently January 3rd. The customer is still due as of January 1, 2025, date the customer is scheduled to make their payment. The past due amount of $133 since January 2nd, the date they became past due after not making their payment. History will show the current or late status of the last 12 payments the customer has made and is not loan specific. This means payments can also be from previous loans if the current loan has less than 12 payments. Each history value may contain the following: C for current or paid before 1 day past due, 1 for 1 month past due and is 1 to 30, 31 days depending on the number of days in the month. 2 is for 2 months past due, 31 to 60 days past due. 3 is for 3 months past due, 61 to 90 days past due. 4 for 4 months past due, 91 to 120 days past due. Depending on company policy and charge-off settings under config, we'll decide the maximum age to show a delinquent account for, at 5 or 5 or more months past due being the longest period of time tracked for age. The history will be green if cash was given to the customer to renew or refinance the loan. This is important to know how many payments back the last time the customer received money. This will help determine if the customer is eligible or not for future loans or high credit maximum amount customer can borrow increases. Age will show the current or late status of the loan. In this case, the customer is a 1. That means 1 to 30 days past due, and if the customer makes a full payment of $133.75, this would show C for current. Age can also be a 2, 3, 4, or 5. Age with an asterisk next to it means that the customer is past maturity date. Take a look at the following example. the account is paid off, and this can quickly be seen by the payoff IF being a zero amount. The customer can renew to the previous renew amount financed of $700 and R for receive $700, or renew high credit amount of $800 because the high credit or maximum amount the customer can borrow was raised from $700 to $800, and receive $800 to renew, refinance the loan. The following example is a charge-off account. It can quickly be identified by the payment transaction type of G, meaning charged off account. The renewal amount will show zero on a charged off account. The remaining balance is also $1,095.49, and because this loan is charged off prior to its maturity date, the final date of the loan of 8/17/25, if a payment was accepted at this point after the charge-off, the payoff IF amount is less because of the interest that has not yet been accrued on the loan due to the loan not being past its maturity date. Prediction calendar will display a calendar showing the potential renew offers based on future dates. Amount customer may owe might change if they are late and a late fee is added. This calendar will also show potential date the accounting may change if a payment is missed or a late fee is applied. Defer payment button. This feature is used to skip a payment. This will move all upcoming payments a month ahead. This is used to help customers out during life-altering events such as hurricanes, floods, tornadoes, or other issues per company policy. This concludes the overview of the account status section of the account record screen. Thank you for your time watching. See you in the next lesson.